What is up, guys? It's CJ, and we're back again today with another backtesting video, again here on SUI. So we're going back in the archives for this one, back to November 2023, and I think it's a really interesting model as a case study to take a look at, and there's a lot of different factors. So today in my private group, we were using this model for a mock trade where I was basically playing out this trade and having traders call live entries on it like it's the live market to kind of see what our thought process would be at the time. And so it really inspired me to make this video because I think it's a very interesting case study, and a case study where we can take a look at a lot of factors like order flow, like understanding the context, like understanding the sessions even, and TCT within TCT. So without further ado, let's get into it. So when we are trying to build our bias here and our higher time frame order flow, we can see that price has been trending down. And on this downtrend, we get a nice break of structure back to bullish, right like this. We'll make this regular. So we get a break of structure right like this. You know, great time displacement, very, very convincing break on the high time from the daily time frame. So according to market structure and order flow, we can be expecting our structure to trend like this. So this is expectational order flow, a higher low for the higher high. So when we're looking for shorts in this region, we are basically looking to take that pivot point down to put in the higher low for the higher high. So with that in mind, let's start to take a look at our range that we have forming. When we're coming down here, we can see that we have a range forming. We have a nice PS from a Wyckoff standpoint here, just a market structure continuation going in. I do want to say that this wick, I think it was tempting to look at this range like this, with this being the starting point, but this wick is just too, you know, it just makes it look not clean, and this wick not even a liquidity point because it's swept. You know, it swept all this liquidity right here on the left. So we're looking at this as the PS, and we are looking at this range now. So if we go on the lower time frame, we're going to get some POIs going. So I guess we have to come to the left, I suppose, and get our kind of local POIs. My favorite POIs right here, kind of these triple highs, liquidity POI coming into a fair value gap, where we do have this nice structure supply, but from our current model, it would be too much of a stretch to make it up there. We have this fair value gap, really nice looking, and this really nice liquidity target. So with that in mind, we can come back into our range with those POIs on the chart. And now we have our range here on SUI. Come down to the 10-minute, and so this is where I started it, kind of looking for people to call entries on this chart, so you can kind of follow along and do that as well. You have your extreme liquidity right here, comes into extreme supply, but does not leave a nice looking supply POI for an EHP. It's also very tight, but like those models are. So I'm going to play out price here, and we're going to kind of see what happens. We're getting some lag here. Been having some Wi-Fi issues today, but we're going to play out price on the higher time from here. Hopefully we can get some time frame switches. Okay, and it doesn't want to play it, and it won't play it on the lower time frame. All right, so in this case, I think we're just gonna keep rolling. We're gonna battle through. We're just gonna duplicate the tab and quickly go back to SUI. Don't want to make this video too long. Bear with me. This not the best Wi-Fi, so you can kind of see something here, although it won't give you the whole picture, and it'll still be very valuable to to see this model playing out. So hopefully it won't take too much time there, and we'll hop right back into the model. Perfection. So we have our same POIs here, and let's hopefully this works. Whoa, slow this down. All right. So we had no good Model 2 POIs, and we are playing out price now, so that's great. And now we can see that we have our liquidity target here, but we front run it. We front run it. Looking at the timing and the sessions, we have Sunday. So this is market open for the week on Asia. You get, looks like a push up and then a break of structure back to bearish. So that timing wise is decent. What we don't have though is a nice third tap. Good from a, like time displacement perspective, but this almost a UNF, not really any wicks. This is not something that we normally trade within TCT, and we're front running our POI. So not good, not looking to take this break to get trapped. And maybe you think you missed it right there, from a psychological standpoint. You're like, oh, I maybe missed it. Whoa. Okay. That's a good pause right there. And so now we come up and we take that high again. Let's look at our structured. What do we have? So front run that point. Now we take that point and we put in 10-minute structure here during London. We get that London push up, blue representing London. If you guys want to see the sessions and not familiar with the indicator, there you can see that London push up, breaking structure aggressively back to bearish right here. So let's look at this, and can you validate this as a model? This is where system-based focus comes in, I think, because if you come onto the higher time frame, you can't really validate this range currently as a 3-tap, as a TCT model, because the only way you would have to do it is by looking at this range like this, and it's not really that clean of a range. Put a light range on here. So you'd have to look at it as this range, and then be playing it for this, where this is, you're kind of having a full TCT. It's not the cleanest, and you can't validate with structure, because when we come onto the higher time frame, you can't validate with structure because there's no 2 candles going down for the 6-candle rule. Obviously, I believe I'm talking to all TCT educated traders, whoever's listening to this. So you can't validate this as a 3-tap. It's only a 4-tap at the moment. So, this is an aggressive move up. If you take this break, and we had some guys take this break, which I think realistically is a valid entry. You're kind of still looking at this, just kind of taking our main liquidity point, but you can't validate it using structure, and it's not a valid TCT model at this time. So I'm going to play out price here. And that was a little too quick. But this, if you would have taken this, you would have potentially gone against your rules for TCT models, and you would have been stopped out. This is where the model gets really interesting, and we played it out a little fast, but it's going to be what it's going to be. So what do we get after this? Let's look at our sessions again here, because there is a lot to be learned from it. So you have an entry here that's not valid using TCT. Then what you get, I'll make the sessions bright here. What you get, and what invalidated that London entry, is a initial push down on New York. So if you were looking to short this, if you already had a position here and you were looking to short this as a reconfirmation, you're shorting right into the New York first move. So you're shorting right into manipulation. New York gets its first move and then immediately reversal. We see that almost on a daily basis, like textbook New York price action. But so now that that manipulation is avoided, let's see what we have and how our model has evolved. So what we can see is, while going to put in our third tap, we have created, sorry, this is not it. we have created a beautiful range. And this is a daily range where Asia starts the range with almost a UNF, not a good high. We take that out. London creates the second tap, and now New York with a perfect down manipulation puts in our third tap, which is also can be the third tap of our higher time frame model. So this third tap of our local model right here, 1, 2, 3, like this, is also can be the third tap now validated as a TCT within TCT on the higher time frame. So how can we trade this? New York gets its manipulation, and let's go down to the lower time frame. So what do we leave? We leave a nice order block here because after manipulating up, we get that aggressive sell-off. We're going to go into the lower time frame and see how we could have been entering this. And so this model was actually a dream for the New York traders, the North American traders, because they probably would have been only coming into the market right around here. So they wouldn't even have had an entry during London. And the only thing they had to avoid was entering on this this New York manipulation, which we see is the first move being the fake move. So what we can see from a POI standpoint now that New York has kind of showed its hand a little bit more is we got this really nice extreme supply where we can be looking to trade the test of our local model, which is also the test of our higher time frame model because this is our higher time frame third tap. So we have no market structure because it's aggressive and sweeping liquidity. We really didn't have any supply right here as well. I guess you did no, because this is already mitigated and New York opens right here. So you have this supply right here. So you can be watching for a level 2, the level 2 market structure trending up like this, coming into extreme supply. So you get that level 2, and then you get that level 2 aggressive break, or just good break back to bearish right here. Let's give that a level 2. Basically confirming the test and confirming the model because we did not have market structure here. But this is also because we're looking at it from a local model point of view, and I'll zoom it out and show the model. So here's the entry on this candle close right here, stop above the high because we're trading the test, which we see all the time. And in actuality, there's no reason to go higher. We've mitigated our most refined supply. If we take this point out, we're most likely going to take out this Wyckoff point, which is the TCT within TCT. So RR to the technical target being a 4.3 at that candle close, because we're obviously targeting the higher time frame. And you could think about maybe taking a take profit here, but you would have probably had to take a lower time frame break even, and the RR is not very good. You're kind of just using this local model to confirm your higher time frame model. So if we zoom out, let's take a look at what we have going on. So you've entered this trade. How does your model look? Let's get it going here. All right. I think the 15-minute will be a good time frame. Yeah. So this is your model right here. Let's draw this beautiful liquidity curve. It does extend up into there, but we'll just draw it to here. Haven't pulled the volume profile, but we can take a look at it now if it will load. Yeah, really nothing. Yeah, it's pretty good. It's really good. You get that breaker structure back inside the volume area high. So that's another +1. This is a TWT model. Your 1, 2, and then third tap is a TCT within TCT. So here's the trade, and we're gonna let it play out. That Asia session the next day, then London sells us back off. New York manipulation up and then straight down, so you see the exact same pattern again there, and right there you hit your technical target of the model. So we didn't do the time duration, but I can show the time duration to the moment of entry. This was 2 days 17 hours. Very very nice time duration. And here we can see a model 1 on SUI where it's a TCT within TCT. You got a super nice PS coming into the range, that market structure before. Sorry, that high is right here. And then BC, UT, UTAD, and then the test is both the local model TCT within TCT test and also the test of our bigger model. So, you know, pretty advanced model here. There was some things you had to watch out for. Obviously, this is a fast move up, so taking this, I don't know if you would do it in the moment, but the New York traders definitely having the best crack at this without taking any L's before getting the eventual W. So with that, we're gonna conclude this back test on SUI. You know, super beautiful model, and honestly a relic model from like almost, I guess, 2 years ago now, before I even knew what trading was. So hopefully you guys have enjoyed. I've been CJ, and I will see you in the next one.